I'm here to talk to you about an investment company that provides access to private company investments. So the funds that you're used to reading about and many of you will be invested in will be investment companies that look at listed equity. They'll select perhaps 20 or 30 listed companies. This fund targets private companies only. Now, the world of investing in private companies is very interesting and a much larger universe than the available stock of listed companies. If you look at companies in the US with more than 500 employees, 86% of them are privately held. So there's a perception that the listed market is, the dominant source of capital for companies. That isn't the case. The returns on offer from private companies, generally speaking, are higher than those on offer from listed markets. If you look at private equity funds over a long period, for example, 20 years, in the US, the average private equity fund returned 15.8% annually in the 20 years ending December 2014. The S&P 500 returned 9%. So you've got nearly 7 percentage points of outperformance in a private equity fund versus public equity. The fund that I represent invests only in private companies, so our returns will be based on private equity fund returns. Now, other famous investors, you may not realize, already invest in private equity. So Neil Woodford's Patient Capital Trust, that is a hybrid of listed equity and private equity. That's one of the most popular funds in the market. Warren Buffett very famously invests in quoted companies. He also acquires private businesses and runs them within his fund. That is effectively a private equity model. The Scottish Mortgage Investment Trust is one of the largest and most popular trusts on the market. That invests in private equity. The Harvard Endowment Fund, one of the most successful university endowment funds in the US, has nearly 18% of its assets in private equity funds. So word is spreading. These are examples of media coverage that our fund has received just in the last 6 months. So to tell you a little bit about our fund, we have been around for 8 years. We listed in Amsterdam originally, but moved to London in 2010. And we joined the main market in London in September last year. And we joined the FTSE 250 index in December. So we've only recently become a mainstream fund. A few statistics there without overwhelming you with too many numbers. The annualized return since December 2007 in sterling, in terms of our NAV growth, has been 11%. So 11% annual performance starting at a December 2007 starting date, which is very strong performance. You can see we're a large fund, £730 million market cap. We trade at a 22% discount to our net asset value. So I've just described the returns on offer, the consistency, the 11% a year. Even so, we're not very well known. The market doesn't really recognize listed private equity at the moment. It's slightly out of favor. And this is, we think, an opportunity, 22% discount to NAV. Quick snapshot of the portfolio. We're majority US, so 65% of assets roughly in the US. 19% in Europe. We have a target of 25%, so we'll aim to increase that over the next several years. And the remainder in Asia Pacific and rest of world. In terms of the split by stage, we have uniquely a very high percentage in venture capital and growth capital investments. So the slide I put up to start with, the likes of Uber, Facebook, LinkedIn, all in the portfolio. Spotify, Airbnb, SpaceX, the Elon Musk companies. We have all of those in our venture capital funds. Some examples of other well-known names. You can see Snapchat in the portfolio. It's a leading photo sharing app. On the buyout side, Walgreens, Alliance Boots, a very large, well-known transaction by KKR. Alibaba, we were in there before the IPO. Hilton Hotels. Rocket Internet is a very interesting one. That's a German-based startup incubator which replicates successful Western websites and reproduces them in new markets. So strong examples of some of the companies we have in the portfolio. Exits, I've already mentioned a couple of those. Facebook is our most well-known exit, and 300 times cost on that deal. Twitter, we were in long before the IPO. Oculus is the virtual reality headset maker, which was acquired by Facebook famously for $3 billion 2 or 3 years ago. GoPro, the wearable camera maker, that's been in the portfolio. We have, to summarize, exposure to all the exciting investments that you will have heard of. Now, to wrap up and to summarize, HVPE is the 4th largest listed private equity investment fund in London, so £730 million market cap. The discount of 22%, I've mentioned, that is wide by investment company standards. Typically, an investment company will be 5% discount, perhaps, in the mainstream kind of equity sectors. We're at 22%. And we don't think that will last very long. Part of the reason we're here today is to promote our shares. The fact that we joined the index only 4 months ago, means that there's still an opportunity. The awareness out there is not as strong as it should be. We're, at the moment, selling assets at a near 40% premium to book value. So when I talk about a discount to NAV, the NAV itself is conservative. The value that we hold in our books, when we realize and we turn that into cash, we see an average premium of 40%. So you're getting a share that represents an NAV that is itself conservative, and you're buying that share at a discount. So that's the opportunity that I wanted to present today. I've kept it very short and simple. There are many more questions that you may have. We're on stand 61. We've run out of marketing materials already, unfortunately, a little bit more quickly than we expected. But if you have further questions, then please don't hesitate. Okay, thank you.